Welcome everybody to the Chinchilla Pickin' Podcast. It is November the 30th, 2025 at 3:30 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and once again, I am rolling solo. Here I come, rolling solo in here. The lone wolf attacking again. Brandon could not make it again on this episode, so I'm just going to roll with it. Last minute cancellation for him, but we're going to go with it. It is his birthday. So if you are on Instagram or TikTok or where else are we? StockTwits, go ahead and send Brandon a happy birthday. We'll pass it on to him if he doesn't answer one of those social media, and that way he could get that and let him know you were thinking about him as he's dealing with this nerve issue he has going on in his neck and spine. All right. There's quite a lot that happened, and Brandon was actually going to be the one to bring it up all the news. I did not have what just happened last week or the week before in on my radar here to cover because I knew Brandon was going to. So without him covering it, we're going to cover what I had to cover, right? And it's usually a shorter one when it's a downtime with Dave, and it's just me. I don't talk too long, but I try to cover and keep it pointed on one or two issues. So first one I want to bring up here is about OPEC and oil, right? OPEC Plus has agreed to leave oil outputs levels unchanged for the first quarter of 2026 at its meetings on Sunday. That was today. This is a newswire that came out 5:21 a.m. Eastern Time today. The group is concerned about they want to slow down its push to regain market share amid fears of a looming supply glut. So they're worried about too much supply coming out into the world. The reason for that is if there's a Ukraine-Russia peace deal, what is going to happen is that the Russian oil will flow. It will flow so fast out onto the market, and they're worried that's just going to be too much supply. Well, there's a long way to go before we see a Russia-Ukraine peace deal done. And if the peace deal doesn't get done, that means there's going to be even more sanctions on Russia. And those sanctions are going to keep oil coming out of Russia very limited. However, Brent crude has closed Friday at 63 a barrel, so that's 15% down for the year. That's due to the oversupply by OPEC Plus pumping out oil every single meeting except for this one. They are worried about the global geopolitical environment and the economy as a whole for globally. So they are concerned that there's just going to be too much and it's not going to be getting used. This is what we're looking at with oil. Knowing this and having heard this and read this, what's our oil play? What are we doing with this, David? You're not going to do anything with this. The oil companies are going to stay right where they're at. They're going to continue to trade right in the channel they're in. You're not going to see much movement one way or another due to this news. This is kind of exactly what we thought was going to happen with oil and OPEC Plus. In fact, I believe I covered this on another podcast earlier this year, about 4 or 5 weeks ago. Check it out, listen to it, see what's going on with that. All right, moving on to the next one. This one is I got some news about Eli Lilly, and this is one I want to make a call on. All right. So, again, 4 or 5 weeks ago, I talked about Eli Lilly. Where are they at? Are they going to be the next trillion-dollar company? Well, their stock price moved up and they became the next trillion-dollar company, which is exactly what I thought they would be. They have a great pipeline, strong pipeline. They got new drugs coming out in different areas. They're not just a weight loss drug company. They are much more than that. I love their cholesterol drug that's in the pipeline. If they could get that to final approval, that's really going to skyrocket this, billions and billions more in value. So I believe right now off the dip that we just had last week, where Eli Lilly, they had peaked right around, I would say, about 1,150. They are now at 1075. So I would say right now they got some good movement. You can make a good 5% return on your money here, barring any overreaching sector news that would bring down the healthcare stocks and pharmaceutical stocks as a whole. Barring anything like that happening, I don't see anything in the headlines. I've checked. I don't see anything going on. So I believe that Eli Lilly is poised for a nice 5% return next week. That's definitely one I would look at. They got a lot of unusual options activities that was covered. Also, I saw a couple headlines talking about this. Most people were actually kind of bearish. There was a lot of puts, millions of dollars in puts going on for Eli Lilly. I would bet against that. I would say 57 puts were in millions, but 58 calls were in even more. There were five times as many dollar value into the calls. So I'm going to go ahead and say, hey, Eli Lilly poised for a nice return back on your money. Go ahead and buy it going in on Monday morning into this week. It's going to be great. It's a good one to do. All right. I had a couple other things I wanted to cover. However, given that Brandon is gone and we don't have the background or the background information, it kind of doesn't make sense to go into them. So I'm going to give you a recap of some of the ones I've already covered and kind of where I'm looking at for them coming into this following week and what we have going on. So things I've covered in the past, Lens Therapeutics is one. Lens Therapeutics has now moved above $30 a share. It actually went profitable for me even after I had the dollar cost average it down. Remember, I said I got it like right around 30 bucks and change. It went profitable last week for me. I was very happy to see that. I'm looking for more out of Lens Therapeutics. I'm excited for Q1. I keep saying this over and over and over again. In Q1, I'm looking for big moves in this. Once we start seeing the advertising and it goes direct to consumer, this is one you want to buy and hold. You don't look for any huge movements up right now until we see the sales come Q1. Don't know what happened there. Nvidia took a dip down. Of course, during some news last week, I disagree, or the week before even, I disagree with this turn down. It went down a lot. I say it's perfect. It's ripe to go ahead and get back in. So if you sold on it, it's a good opportunity to get back in. If you owned it before, right now is a good time to buy it as it dips down lower and kind of dollar cost average if you need to in that case. One thing I'm looking at is also UVXY. It's one of the ones that follow the VIX, and the VIX is a volatility marker. UVXY is a derivative of that. UVXY did a reverse stock split recently to raise the stock price up. It does this every so often because over time UVXY always goes down. Well, we had a good, solid, safe, stable past couple weeks, and so UVXY has continued to go down. This is one that I'm definitely looking at seeing how the market sentiment is Monday morning. I might play some options on UVXY depending on how things go. I'm also looking at Tesla for to play some options because Tesla has taken a nice gap up. Usually when they take a nice gap up like this, Tesla has a 1 to 2% drop down. Good opportunity to buy some options on the puts, see what happens. Maybe make a good 20-40% return on your money. Maybe not. We'll see what happens, see where it goes. Definitely looking to see the market sentiment come Monday morning, see if this is going to hang on or if things change overnight or if there's some other news that happens that can always change things. That's one you watch going into Monday morning to see if, we're going to continue with that or not. Other than that, there's a lot of things to watch going on. Not many earnings, not much going on in that regard. However, always keep your watch list handy. Always keep it ready. Keep an eye on things. Be ready. Have some cash handy going into the holiday season. The retailers were reporting good numbers going into Black Friday, which usually has meant in the past that we're going to have a great Friday and a Cyber Monday. However, the numbers being reported Saturday morning and Saturday afternoon were not as good. So therefore, people were buying a lot going into it, but then Black Friday happened and the actual sales for Black Friday were lower than what we wanted. That's not a good thing for retail overall. I'm looking for a strong retail holiday season, but I was hoping with the sales coming into Black Friday, it looked like it was going to be a blowout holiday season. Now I'm just looking for a good holiday season. I'm overall going into Q1 of next year bearish on the economy as a whole. I know Brandon is bullish. We have swapped roles. I'm usually the perma bull, always bullish on the economy. I am bearish going into Q1. We'll see. I got to see data to change my mind. The data I've seen so far tells me we're going to be bearish. We're going to get through this holiday still strong. The consumer's going to get through it. They're going to use credit cards or credit or Klarna or Affirm to pay for their holiday shopping. Not always a good thing. And then come Q1, we'll see where the strength of the consumer really is. We'll see if it's as strong as we hope it is, and we'll go from there. All right. I thank you guys for listening. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Have a good night.